Hey everyone, welcome back to Corporate Decoder. Today, X.O.S Incorporated just filed an 8K about a new stock offering, and I see a potential warning sign for investors. Quick note, this is not financial advice, just my take on public filings for educational purposes. They just sold a bunch of new shares, and that usually means one thing for existing shareholders, and I want to tell you what that is. This is an update from X.O.S Incorporated, a company that makes electric vehicles. They have filed a report called a Form 8K, which basically means something important happened that the public needs to know about right away. The most important event here is that X.O.S entered into an agreement to sell more of its common stock. This is called a registered direct offering. Think of it like the company printing and selling new shares to raise money. They sold about 1.1 million shares in this offering. This is a significant number of new shares being added to the market. The stock they sold is their common stock with a very small value assigned to each share called par value, which is just 1/10,000th of a dollar. You can see here that their common stock is traded on the Nasdaq Capital Market under the ticker symbol XOS. They also have warrants, which are like options that allow people to buy their stock at a certain price. The ticker for these warrants is XOSWW. It is important to note that these warrants are exercisable at a very high price of $345 per share, which is way above the current stock price. This deal happened around early June 2026. The company signed a securities purchase agreement to sell these shares. They are selling them to some institutional investors, which are basically big investment funds. They also made a placement agency agreement with a company called Roth Capital Partners. This company acted as a middleman, helping X.O.S find the investors to buy the new shares. For their work, Roth Capital Partners will get a fee of 6.5% of the money X.O.S raises from selling these shares. They will also get reimbursed for some expenses, up to $75,000. The company is expecting to raise about $6 million from this offering. This is the money they will have before paying the fees to Roth and other costs. So they are selling a little over 1 million shares at $5.5 each. Let's do some quick math. If you multiply 10,90910 shares by $5.5 per share, you get approximately $6 million. This is the gross amount they raised. Now, why is this potentially a concern for existing shareholders? When a company issues more shares, it can dilute the ownership percentage of everyone who already owns stock. Think of it like a pizza. If you have a pizza cut into 10 slices and you own one slice, you own 10% of the pizza. If the pizza maker suddenly adds more pizza to the pie and cuts it into 20 slices, and you still only have one slice, you now only own 5% of the pizza. Your ownership percentage has been diluted. This new offering of over 1 million shares means that existing shareholders will own a smaller piece of X.O.S Incorporated after this deal is fully completed. If a company is struggling and needs cash, selling more stock can be a way to survive. However, it often signals that the company might not be generating enough cash from its operations. Looking at the recent news, XOSWW warrants are trading at very low prices, currently at $0 with a 52-week range of $0.01 to $0.01. This suggests the market has very little faith in the company's stock price going up significantly in the near future. When companies with struggling stock prices issue new shares, it is often a sign that they are trying to stay afloat rather than grow rapidly. Historically, about half of microcap companies that do multiple rounds of stock issuance, like this, can eventually end up delisted from major exchanges. For example, companies like Radio Shack before its bankruptcy often had patterns of multiple stock sales to raise cash. The filing also includes a legal opinion from Proskauer Rose LLP confirming the legality of the shares being issued. This is standard procedure for these types of offerings. And as we mentioned, the details of the agreement with Roth Capital Partners are here, labeled as Exhibit 1.1. The main agreement to buy and sell the shares is Exhibit 10.1. Finally, to read the interactive data file, useful for computer analysis of the report. Overall, for X.O.S Incorporated, this is a move to raise capital, but it comes at the cost of diluting existing shareholders. The low trading price of the warrants and the need for this offering suggest the company is facing financial pressure. The risk I am watching is whether this capital infusion will be enough to turn the business around or if it is just delaying the inevitable. What I am actually looking for is a clear path to profitability and sustainable cash flow generation. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.